In this video, Ed Yardeni expresses concerns over the prevailing bullish sentiment in the stock market, suggesting that a short-term pullback could occur in January due to factors like portfolio rebalancing and capital gains taxes after strong gains this year. While he acknowledges the long-term growth potential, he points out the heavy focus on mega cap tech stocks, referred to as the Magnificent Seven, which may limit broader market expansion.
I think there's a good chance that January will see some selling here. I think a lot of people have accumulated some monster capital gains, and I don't think they want to rebalance their portfolios before the year end because of the capital gains taxes. So I think there could be some rebalancing in January. We'll see how powerful this bull market is if it kind of overcomes that, which it might.
What do you make of the makeup of this sort of most recent leg that mega cap tech is awake?
Yeah, it's still going.
Does it surprise you?
A little bit. I thought at this point we were seeing signs of broadening, and particularly I would thought we would broaden into the 493, the rest of the S&P 500. I think that's still happening, but clearly the leadership is still the Magnificent Seven. And look, there's always something exciting that they deliver. I mean, quantum chips is what Google said they're going to be delivering. I think there's a little bit more hype than reality there. I don't know that it's ready for prime time, but the market certainly loves to hear that kind of stuff.
Oh, your point's well taken. Like, Apple today, we have news on ChatGPT integration.
Yeah.
You mentioned the Alphabet news, which we were talking about earlier in the program.
Yeah.
This is where the action is. You go where the money is.
Yeah, that's right. That's where the headlines are. And I guess it's exciting to know that Siri is going to be smarter with artificial intelligence. But it wasn't really a surprise that Apple's moving in that direction. But that's what everybody wants to invest in now is technology and communications, and that continues to go. That's where the money's going.
Did you ever think, I mean, maybe you did, and maybe it's not so outlandish to think about, since we're on the doorstep of a $4 trillion company in the United States stock market? Like, Apple is pushing up against that as we speak.
Yeah. Well, the country is extremely rich. I mean, we got like $170 trillion in net worth in the household sector. So they're sitting in a tremendous amount of net worth, and that includes stocks and real estate. I think the country has really never been wealthier, and we're seeing that in the value of stocks. People have money to spend on stocks, and the companies are delivering earnings.
Yeah, they are. I mean, there it is, $3.73 trillion right now for Apple. Speaking of numbers and big ones, 7,000 is your target for 25.
Right.
8,000 for 26.
Right.
10,000 by decade's end. Talk to me about that.
Those aren't really crazy numbers. They're consistent with historical math. The S&P 500 tends to go up 7% per year, including dividends. It tends to go up about 11% per year. And so that 11% trajectory would get us to 10,000 by the end of the decade.
We'll leave it there. I got to run. Ed, it's great having you here.
Thank you.
That's Ed Yardeni.